Hello, it is Sunday, November 4th, 2018, and this is a, a separate video from the follow-up one that I posted. This one I just want to talk about, you know, levels of what we're trading right now and what we should be looking at as we head into November week 2. We have a lot of stuff coming down the pike this week. We have obviously the elections on Tuesday, and we will trade the reaction to those on Wednesday. And then on Thursday we have a Fed statement. Yes, we have a November Fed meeting this week. And instead of it being the usual Tuesday, Wednesday, it is Wednesday, Thursday this week with an FOMC statement on Thursday. Now, since Powell has come on, we have not once had a nice up day after the Fed statement. Okay, or the day of the Fed statement. It has always turned into a sell-off, every single one. So if there's going to be some special magical thing that's going to happen out of this statement that's going to change that, great. But every single time that we've gotten a Fed statement out of this guy, we wind up selling off afterwards. Now, the only saving grace is that the media doesn't seem to give a shit about this particular Fed meeting because it doesn't have a press conference after it. So everybody assumes there will be no rate hike at this meeting. That doesn't mean anything. There have been meetings where we had no rate hike and we still sold off afterwards. It just seems to be what is done at every single one of these statements. So hang on to your profits. If for some reason we have a huge bounce and rally day on Wednesday and you're carrying calls into Thursday, just remember that at 2 o'clock Eastern, when that FOMC statement hits on Thursday, that you could lose all of your gains if you're still sitting on them, or if you've taken profits and you've bought even further out of the money calls and you're sitting and thinking that we're going to go even higher. Just remember, you know, that we have sold off after every single Fed statement so far this year since this new Fed chairman came into being. Okay. All right. Let's take a look at where we're at and what's going to define our upside and our downside right now based on the technicals, which is really all you've got right now because we've careened back down and filled all these gaps that we had made on the way up. And right now, all we have going for us, because at this point you have to assume that most managers and people that are running big amounts of money are in a lot of cash right now. And they're looking at things like the simple moving averages to give them a guiding idea of what the average closing price is, and they judge the health of the market through that. Okay, and if there are people that are still long, they know that they will be giving up supply at things like the 200-day simple moving average, which is why we've spent so much time closing below that. Okay, and on Friday when we opened and we had the chance to move up above the 200-day, because in the pre-market on Friday, we had a news-related event that happened overnight, and the futures traded up and all the way up into the pre-market to 27.66 and a quarter, and that would have taken us on the S&P 500 just a little peak up and over the top of the 200-day simple moving average. But we sold off in pre-market because that news that drove us to that place got contradicted, and we wound up selling back off before the open. And so after the open, we only made it to about 27.56, found supply there and came down. But on the downside, we found demand pick up here at the 10-day simple moving average. Now, here is the blue line is the 10-day simple moving average. On the 30th, we had a nice little rally off of our new swing low that had been set on the 29th. This was the last day that you could trade for the month of October and have trades settle in the month of October. Everything that was traded here on the 30th and 31st was settled in November. So that might have had a lot to do with why we pressed down to this new swing low on the 29th. And then on the 30th, we turned around and we began to work our way up. These are the initial buyers buying up that bottom and working our way up here to the 10-day, which we opened on, gapped up, open on the 31st. And right now, this 10-day simple moving average pretty much acts as our gap support, our support that keeps us holding us up from filling this gap. And of course, once we fill this gap, it's probably highly likely that we're going to come on down here, and we're probably going to wind up testing this this 2603 low. And if we break this 2603 low, it's game on again for our ultimate goal, which is down here to fill in this 2461, 2480 to 2461 target down here on the downside. Okay, but in order to get there, we got to get through the 10-day simple moving average first. And on the upside, we are finding supply at 2756 on up through the 200-day simple moving average. And the reason for that is this: if you look over here on the left, here's where the sell-off really started growing some teeth. It began all the way back here. Here was our all-time high over on the left side of the chart here, and we started intermingling with the 10 and the 20-day simple moving average. That's always, the first thing to go. This is, everybody getting out. These are the money managers getting out, skimming the cream off of the top, and then just getting out as high as they can. And then things start to roll over once we lose the 10 and the 20-day simple moving average. And we spent a couple of days bouncing back and forth on the 50-day until we gap down open that fateful day on the 10th of October, gap down open below the 50-day, and made our way on down. And I really look at the sell-off as from here to here. That's sort of this like little triangle shape here, or wedge shape. That was part one of the sell-off. Part two is this breakdown below the 200-day simple moving average that took us down to our swing low. And now we have this weird little part three that's starting, which is where we live now, just above the 10-day, trying to fight our way back to where part one ended, over here at this 2756. This is where this gap was. This was that first time we put in our second close in a row below the 200-day since the sell-off of February 2018, when we sold off down to 1810. That had been the last time we put in two closes in a row below the 200-day. So, and I warned you guys all along as we were chopping back and forth through this, watch out for that 2 days in a row. When we get that second close in a row, daily close in a row, that's going to be a big trend change, and sure enough it was. So after that second close in a row, we had that trend change down here that took us down to our low, and now we're on part three, and on Friday, the highest we could get got us back to part one here. So part one, part two, part three. And in order to get further up the road, we've got to get through 2756, and we've got to get through the 200-day. And in order for those of us who are looking for and in the bear camp down here, thinking that we're going to get back down here, we've got to get through this 10-day, and we've got to get through filling this gap and breaking that as well. What makes it a little bit, even more complicated is the chop that we end up getting into intraday. When we look at the 5-minute chart, okay, here was some stuff that was happening. When we look at this on a 5-minute standpoint, okay, here's that gap up open that took us up above the 10-day simple moving average. And you can see that we sit here and we chop during the day between basically 27, as low as 27.10 on up to this 27.3650 level. Well, what's so important about 27.3650? That's the halfway back point for all of 2018, for the whole range, okay? And then finally, we peeked our head up above it on Thursday, right at the end of the day, and closed above that level. And then on Friday, we opened up here, but we totally gave it up here at 27.56. Fake news overnight on trade deal. I put a note on my 5-minute chart here, and we rolled over. And once we snapped back down below this 27.3650 again, the selling really accelerated. But we were saved right at the 2700 level. That was about where the 10-day was. The 10-day simple moving average drifts a little. So when you start running towards it, it drifts a little lower. And when it's above you and you start running towards it, it begins to drift up a little. So the bar moves a little bit. You check where it is on the open, on your daily chart, and then you just anticipate a couple of more points lower if you're going towards it from above, or a couple of points higher when you're coming up at it from below. I hope that makes sense. If it doesn't, just send me a direct message and I'll explain it a little more closely. Our 20-day simple moving average came in right here. That's why this 2740 level begins to be such a key spot. Once we poke our head up above 2736, then we have our 20-day simple moving average. And if we look at where the roadmap is at, you can see that the 20-day simple moving average is a falling line, and probably on Monday when we open, it's going to be here at this 2736.50 again. So we're going to need to be able to poke our heads up above that 2736 level. That's going to become even harder resistance, or even stronger of a breakout level if we can get past it. So in any case, I hope this video helped. I hope it didn't confuse matters more. I'm trying to just show you that there are, when you look at the daily time frame, you see very, very clearly that you have your 10-day down below at the bottom and your 200-day up above. But then when you boil it down to the 5-minute chart, which we use as option traders, especially with these weekly options, and when we see price getting stuck in between a couple of levels, they help us understand what are sort of like the stair steps in between those milestones, like the 10-day simple moving average, the 20-day simple moving average, and then the 200-day simple moving average, which is all the way up here, up out the top of this 5-minute chart. And we see that these intraday levels in between, we chop back and forth between them, but those are the ones that I'm constantly telling you about. And if you've been following and trading with me over the course of the last couple of weeks, you know these have worked really well. These edges, as I call them, are just simply levels that were either lows or closes or just key levels that we made on the way down through this sell-off. Okay, I hope this helped you out. Have a good rest of your Sunday. Futures open in 2 hours. We'll see what they want to do with this bounce off of the 10-day from Friday. See if we're going to continue up on futures overnight, or if we're just going to sit here sideways and have kind of like a nothingness overnight, and see what we get in the morning and where we're going to wind up opening on the S&P 500. That's it. Good luck and good trading.